This is Jitan here and welcome to another episode of Traders TV. Today, I'm going to talk to you about the basics of trading and why some people trade the financial markets, what markets they actually trade, and how you can actually start trading. So let's get started.
So what are the basics of trading? Well, let's first start off with understanding why people trade. Commercial companies like Starbucks need to buy coffee beans. So they're going to be active in buying the coffee market, something that's actually available to a lot of retail traders out there. And of course, they need to buy coffee beans to produce their coffees to sell to people who want to buy Starbucks coffee. So you've got commercial companies who are also involved in trading the financial markets. There's also companies like Nike, a US sports retailer, that may need to buy some Japanese yen because they need to hedge their currency exposure as it fluctuates. As we live in a globalized society, a lot of companies use products, materials, and labor in other countries, and they use those products to sell in other countries which have a different currency. So if a currency is wildly fluctuating, it could cause a serious dent in their profits. So a lot of commercial companies will enter the foreign exchange market to hedge their currency exposure so they can balance their books effectively. You've also got hedge funds who will speculate on markets to make a return for their investors. There are also pension funds, and pension funds who want to make return for their clients, they'll be looking to buy shares in different companies because their fund managers and their analysts believe that these companies will appreciate over time. So there's a lot of different types of traders, investment managers out there, and they're all doing something slightly different. So let's have a look at what is actually available for people to trade. There's the foreign exchange market, which is one of the biggest markets in the world, a daily turnover of around $7 trillion, and it's constantly growing and constantly fluctuating. And foreign exchange market is where a lot of different people trade for a lot of different purposes. You also have the stock market, so trading in shares of companies like Apple and Facebook and so on, a very popular market for longer term traders and investors. You also have the commodity market, so things like coffee beans. But there's other commodities, and some of the most popular commodities are oil, gold, silver, and you have other commodities like sugar, cotton, and essentially any raw materials that are produced around the world. You also have what you call like fixed income products and things like bonds, which is basically buying US government debts and things like that. So there's quite a few different markets available to trade. Most markets are available to retail traders, but not all of them. One thing to remember is that just because a market is available to you to trade, it doesn't make it an easy market to trade. And that's an important lesson, okay? So how do people trade? Okay, well, there are various different ways to trade, but the majority of people are looking to speculate on price movement. Unless you're a commercial company and you're not looking to speculate on where prices are going to go, you're just looking to hedge your current exposure to the foreign exchange market, for example. So a lot of these people who speculate in the market, they're trying to figure out, is the market going to go up or is it going to go down? And that's how they'll look to make their trading decisions. Of course, to the untrained eye, markets do seem random. However, to the trained eye, patterns do start to emerge. However, in effect, loads of different things can affect how a market moves. So there's always the risk of loss. There's always a risk of having a losing trade, which is why risk management is the most important part of trading. So SmartCharts has inbuilt risk management features. So let's take a look at those. So this is the SmartCharts trading platform, and as you can see here, this particular strategy throws up a lot of different potential trading opportunities. Some of them win, some of them lose. There's other things that we take into factor before we start to take trading decisions. But as you can see here on the left-hand side, one of the first things that we always look at is risk. How much am I willing to risk on a trade? Okay, and this is the most important part because trading is about winning and losing. Yeah, and controlling your risk to the downside is going to be the most important part to developing yourself as a trader over the longer term period. So, quite simply, in this particular example, if I did want to sell this, already it gives me what my risk is because I've already put in 1%. So every time I'm looking to trade, I always know what my risk is because I also know that after even 14 years of trading, I'm going to have losing trades. So it's really important that risk management forms a big part of your trading education.
So now you know a little bit more about the basics of trading, you may be interested to learn a little bit more about Learn to Trade, who we are and what we do. Click on the link below and visit the website today. I'll see you next time.